If there is a recession, it's actually a good time for one to gain wealth and to buck the trend because most people will be fearful.
So how do you make money during a downturn? And how do you know that the time is right?
Usually, the stock market will crash first before the recession because the stock market is a forward-looking mechanism that will price in a lot of these bad news before the bad news actually happens. The stock market being a leading indicator is very important at this point in time. If it continues to crash, go down further, then the recession risk will be much higher. If the stock market recovers and go back to its long-term trend, then actually the recession risk, I would say, is lower.
Even though we're not in a recession right now, there's growing concern that one could be on the way. Key US stock markets are in correction territory. There's mixed economic data from the world's biggest economy. And the US leader is refusing to rule out the chance of recession.
If there is a recession, it's actually a good time for one to gain wealth and to buck the trend because most people will be fearful. But that's usually a good time to buy stocks at very cheap prices. You just have to be patient for the recovery to come. It will not be immediate, but it may be a few months down the road or even a few years down the road.
Experts say one good strategy is to start bulking up on resilient asset classes before a recession is even declared. Investors should prioritize government bonds and investment-grade bonds, which tend to do well during a downturn. They should cut down exposure to high-yield and speculative stocks and instead focus on consumer staples.
These are your daily necessities, selling the essentials, your food items, where you have to still consume them. And it could also be utilities, where you still need energy, power to power up your home and your equipment and your devices. Right? There's also healthcare. You can buy more resilient consumer staple stocks where they will still contribute dividends. Some business may still be growing even in this kind of recessionary period, right? Especially those with stickier business models, pricing power, subscription models, they tend to be more resilient.
Bond prices typically go up when interest rates are cut during a recession. Investors with large bond holdings can sell them and use the cash to buy more stocks.
So now actually, to be honest, it's a good time to look at bonds and look at longer duration because high interest rate. So when interest rate goes down, right, the longer duration you keep, right, the better your bond yield is, right, and the bond price goes up. And with tightening credit controls, the chance of companies going default is less. Now, you don't go for your junk bond, conservative, you go for at least a BBB plus and above.
Timing is another challenge for investors.
There are definitely risks of mistiming the market. For example, you might be thinking that the recession risk is very high and you want to position now for this recession. And let's say 2 months later, it didn't happen. And the stock market recovered and then the interest rate didn't get cut so aggressively. This is part and parcel of investing.
And while there are downturn fears for the world's biggest economy, there could be opportunities in taking a more global approach.
The global economy, it seems to have decoupled between the US and China. If you look at China itself, it has done well last 2 months. But of course, there are a lot of people who are being skeptical. It is too fast, there's no substance. But I think there are real substance because 5 years ago, if you look at China then, right, the MSCI China, I think the top 10 companies are all real estate companies. Today, no longer. So China is going through the very tough detox program internally for them to be more balanced. And the last 5 to 6 years, right, I think there's more prominent example like the car companies, BYD, one great example, great company, I think. DeepSeek changes the whole landscape of how people think about AI. I think Asia will do well because the US-China tension, manufacturing firm has been shifting to Asia, particularly like Vietnam, Cambodia, Malaysia. I think there will be a continued shift as well to the regional hub.
For those who want to stay away from stock markets, there's still a way to build wealth during a recession.
If you keep it in, say, a money market fund or fixed deposit, you still make money. For example, a fixed deposit, the value will not decrease even if a recession happens, and you might even gain because there's an interest paid to you, right? Maybe a 3% interest rate, so you still grow your money. It's just that it may not grow as fast as someone who is looking at long-term bonds, high-quality long-term bonds. The price increase may be a lot more compared to, say, keeping a fixed deposit.
On top of staying invested and diversified, having cash on hand is crucial when economic conditions are tough.
During a recession, the biggest fear is not so much about the financial markets actually, it's whether one still keeps a job, because recession, that means that retrenchment numbers goes up, unemployment rate goes up, right? So I would say that still maintain that at least 6 months of expenses. If one feels uncomfortable, right, especially if the sector or industry that they worked in is very sensitive to economic slowdown, they may want to increase their emergency funds, maybe beyond a year.